All right. Hey, everybody. Happy Friday and welcome into Business Salad, where we mix up all things business for you for free.
That's right. My name's Katie Anderson. This is Steph. We are your hosts for Business Salad every Friday. And we are so excited today to have Charles Shapero with us. And we are pumped about this because the topic for today is something we all could use a little bit more information on. And whether you're in business or you're not in business, either way, it's great. We're going to be talking to someone. I am calling him the tax guru. We are talking to a CPA. He knows things about taxes, accounting, bookkeeping. This is the amazing Charles Shapero. So first of all, thank you so much for being with us. We appreciate you very much. Happy to have you here. And we're going to jump right in. We're going to start with you, my friend. So let's just start with, who the heck are you? Who are you? What do you do? Tell us a little bit about you, about Widget Bookkeeping. Tell us a little bit.
Perfect. Well, I'm a CPA, and I've been a CPA I've been doing accounting and taxes for over 30 years. I started in June of 1990 at a little bookkeeping office and ended up working for some pretty large firms. In fact, I was born in California, and I was working for the 11th largest firm in the nation, and they were working me to death. And I don't believe in all work, no personal life. So in 2004, I moved out to Florida to better my life, and it immediately got better. But I found myself with my abilities and my master's degree working for the 34th largest firm in the nation. So they were abusing me as well. So finally, in 2011, about a decade ago, I formed Widget Bookkeeping and Tax. So I can serve the clients that I want to serve the way I want to serve them. And that is a little bit more focus on what they need and a little less focus on every billable hour.
Oh, love it.
Good.
Yeah, that is awesome. I love that philosophy. And so now I'm sure that accounting, well, maybe not for you, but is like insurance for a lot of people. You don't wake up one day and say, oh my gosh, I want to be a CPA. Oh, maybe you were born being a CPA. I don't know, Charles, but what made you want to get into accounting? I just have to know, as somebody who's not great with numbers. I'm not great with numbers.
Well, it's funny. I didn't start out in accounting. I started out knowing that computers were going to be the future. So I started out in computer science. And as part of my general education, I had to take Accounting 101. And just being in that class, you kind of know when something hits your brain just right. And it's like, my brain was made for this. And we loved it. So what we would do is, there's a group of us that really got it. And we'd walk around parading with our hundreds on our test papers. And, our brains work that way, and this is so sick, that if we'd get a 99, we'd feel bad because, how did I miss that? So it's just how my brain works. I'm lucky in that way.
Wow, you're an anomaly to me because
I think that's awesome.
Yeah, math is not my strong suit. I said that on the internet. It's there forever.
Oh my gosh, I love it. And I'll tell you, it takes people like you that not just gravitate that or find out that really that is, you're passionate about it, you enjoy it, it clicks with your brain. I mean, that's the greatest thing ever. For a lot of us that's not the case for. I think there's probably a lot of mistakes that we make. I mean, you probably see both business owners and individuals making mistakes when it comes to taxes. And, I know that's kind of a big question, but one of the things we were kind of asking or wanted to ask you about was maybe what are some of the biggest mistakes that you see either businesses or individuals making when it comes to taxes? What are some of those things that you're seeing?
Oh gosh, well, there's like three.
Let me get the list.
Yeah, there's a list. The first thing, when we start out in business, a lot of times it just happens. It's our little side hustle, and suddenly it gets big.
Totally.
Usually, you're not set up properly. You are commingling your funds. All your business revenues are going into your personal bank account, and all your expenses are being paid out of your credit card or your personal account as well. And that's really difficult. That's why accounting is so difficult for a lot of really small businesses, is because they're not set up properly. Imagine going through and spending a whole entire weekend getting ready for your CPA because you have to go through your bank accounts and your credit cards and pull out and try to remember, was this deductible? Was this business or was this? Okay. And, and the end result of that is you end up paying too much tax. Because eventually you're going through saying, well, that PF Chang's, was that business or personal? I don't want to chance it. I don't want to mess with the IRS. Let's just not take that deduction. Well, if we had set us up properly with a with an LLC, one bank account for business, one credit card for business, then all our expenses are right there. They're easy. In fact, then you can have a CPA or an accountant do your books for you because he can go through and he knows that everything on that credit card is business related. There is no personal stuff there, and the business bank account as well. So I think that the mistake that most of them make is they're not organized and they wait to the very last minute to get everything done.
Yeah.
And there's one more thing. When you first start out in business, nobody tells you that you're supposed to make estimated tax payments.
Right.
So typical story, I get a realtor in my office. She flings down a 1099 that has 120K on it. And I know I know that her business expenses are going to be mileage. I know cell phone, home office, super key. There's a whole bunch of expenses that realtors have. And I know they're going to be about 25 to 30K. Well, if you make 120 minus say 30, you're at 90K. You're got a lot of income tax to pay and self-employment tax if you haven't set yourself up right. And that's really a shock. And one of my jobs as I see it, is to reduce my client's tax bill to as low as I can possibly legally get there and to pull all the red flags off the return. But it's not to make your tax just disappear. That's not my job. I believe it. Oh, you got to do something. No, you made a lot of money.
Right. Absolutely. So now if we toggle back to what you said about people being disorganized and all of a sudden it's tax time and it's this really painful process for them, which in turn makes it a painful process for you as their tax professional. What are some of the top couple of tips that you could give to people to help them stay organized throughout the course of the entire year? So when they come to you, it's not awful.
Well, it really doesn't matter if you're going to use QuickBooks or if you're going to use Excel, but you have to have some kind of accounting system. Really, what we're trying to do is we're going to take all that income and we're going to take as many deductions as we can possibly find against it to get your tax bill that low. If you wait until the end of the year, it's horrific, and you're going to forget a bunch of stuff. You need to do it on a monthly basis at a minimum. That way you can go through your expenses and it's all fresh. You're like, oh yeah, that was definitely a business meal. And to capture all of that. And the stuff that can't be captured, the stuff that's hard, like home office or like your internet at home or your cell phone or your mileage. You're supposed to be keeping a mileage log, but who does that? So those are things that I jog my client's memory and say, okay, well, let's talk about mileage. What do you think you drove? Typical realtor will drive what, 20 to 30,000 miles. If I have a realtor that says, oh yeah, I drove 50,000 miles, that's when I say, that's a red flag. We don't want to get you audited. Why don't you show me your log and let's see, because that's really high.
Yeah.
And of course, they don't have a log.
Get out of here. Keep a log, people, especially
oh my,
my other agents out there. If you're in a big area, maybe on the East Coast where you're going county to county, keep your logs so Charles can help you.
Absolutely. No, that's huge. Those are great tips. And, one of the things, I'm really glad you mentioned it when you were talking about how people are kind of organized. I know that when I first got into insurance 10 years ago, I was told, well, at a certain point, you're going to want to incorporate. But the reason I did it so early, I did it really early, like unnecessarily early, was the reason that you said. It was, for me, it was organization. And it was that exact reason. I had my business account and my personal account, and that made it so easy. So I'm so glad you mentioned that. Speaking of incorporating, in your opinion, and I know this is kind of a big question, but just in general, when someone's kind of trying to decide what kind of entity should I be, what kind of, how should I do that? Do you have any opinions on how they make that decision on what kind of entity they should or should not incorporate into? Any thoughts on that?
Yes, absolutely. And if you ask most CPAs, they're going to give you that stupid CPA answer you always get. Well, it depends. It doesn't depend.
Oh, that covers a lot.
It doesn't depend. There's one answer and one answer only. You form an LLC. And the reason that there's only one answer, most attorneys prefer LLCs over S corps anyway. But there's a beautiful thing about the LLC. It's a state animal. So the Fed didn't know what to do with it at first. So here's how LLCs are treated. If you and I form an LLC, that's a multi-member LLC. By tax law, it's considered a partnership. If you have a single-member LLC, you can't be partners with yourself. So that's called a disregarded entity. The benefit of that is I don't need to file a tax return for it. So where you incorporated, Every year we have to file a corporate tax return, and you should be paying yourself a reasonable salary for your S corp, and those are costs. You got to pay somebody to do the payroll, and you got to pay me to do the corporate return. So the beauty of the single member LLC is that until you're ready to be an S corp, it can be ignored. You save the tax filing fee of the S corp, you save all that payroll expense and complexity, and all that just goes on your personal return until such time as your profit level. You're paying so much self-employment tax that paying me to do a corporate return and paying me to do payroll for you, and is maybe $1,500 a year. But if I'm saving you $4,000, $5,000, that's when we pull the trigger. We file a piece of paper with the IRS and say, hey, IRS, don't ignore my single member LLC anymore. I want to be a big boy. Make me an S corp. And the IRS says, okay, you're an S corp. Easy as that.
I love it. That's a really great sort of explanation, especially for some of those very small kind of trying to make that first step decision. So I think that was a really good way of explaining it. Thank you. That's helpful.
Yes. And thank you for not giving the it depends, because you're right. That's what you get all the time. You tell them, no, that's an adult diaper. It doesn't depend. And I know that you mentioned the federal government. So one of the things that I want to ask you as the professional, how do you expect taxes, since it can vary administration to administration without getting political, just facts, right? How do you expect taxes to change as we go forward from here?
Well, when President Trump was in office, there were several things in that tax act that he passed that we all loved. He doubled the child tax credit. He really expanded the income level by which you could take it all the way up to 400,000, where it was, I think, 100 and something before. So a lot more people got the benefit of the child tax credit. He also lowered the tax rates of every bracket, and he doubled the standard deduction. So have you guys heard of the qualified business income, the QBI deduction at all?
I've heard of it, but I'm not familiar with it.
Bottom line is that business owners and rental property holders will pay tax on 80% of their income because they get to deduct 20% right off the top. This one provision has saved my clients thousands of dollars. So when the election came up, I was afraid, because I know that with Biden with a signature of his pen, he could get rid of the capital gains rate and just make it all ordinary income. As it turns out, with the news that we're hearing, he's going to go even further and make capital gains a huge rate. But what do I expect to happen? Well, for most of my client base, we're making less than 400K. And I expect that Biden will keep to his campaign promise and only raise taxes on taxpayers that are over 400K. For people that are over 400K, they're going to pay quite a bit more tax. The rates are going to go back up. The capital gain rate is going to double. And it's about time, I guess, because the Democrats really want Warren Buffett to pay more tax than his secretary as a rate. So that's what I see coming down the pike. I think for the majority of Americans, it's not really going to have an impact at all.
Absolutely. Absolutely. I know we're doing a lot of picking your brain on advice, so I'm going to continue with that one. What would you say, Charles? What would you say is maybe the best advice you can give to a profitable business owner to maybe help them reduce some of their tax bill? Any advice on that? Just kind of things to think about.
Okay, so here's the best advice. Well, let me start with, people say, I want to lower my tax bill. I need to go out and spend some money and get some deductions. If we do that, let's just say we go out at year end and we spend $1,000 and we're in the 33% tax bracket. Well, $1,000 left our pocket and we get $330 back, but the other $600 is gone. So wouldn't it be great if we could generate a tax deduction and not be out any cash at all? That would be amazing, right?
It would.
Okay, so it doesn't exactly exist, but it's close. You've heard of retirement plans, right? The solo K, the simple. Imagine taking money from one of your pockets and putting it in the other pocket. It's still your money. It's still earning. It's still part of your net worth. You can't touch it for a while, but you've generated this deduction, this sizable deduction, out of thin air. Yes, you did part with the cash, but it's still yours. You get to log on to your Edward Jones or Charles Schwab and see that money growing daily, but you've generated a tax deduction. It's brilliant. It is simply the best thing that you can possibly do. And, a lot of my clients, I do a lot of work for real estate investors. And they hate the idea because they want to go and take that cash that they have and invest in the next flip or the next rental.
Really?
They don't even think about the tax deduction. They just don't see it as worthwhile. They'd rather make 18% on my money right over here.
Yes.
But it's the single best thing we can do.
I love that. Yeah. And as somebody who works with investors a lot, I love that there's some place that I can guide them to say, wait a minute, let's make sure that this is the best option for you as far as what to do with what you've got rolling over. So I love that. And now, Charles, I love you. Katie loves you. Everybody that knows you loves you. Everybody who works with you loves you. But there are a lot of people out there who struggle to find a good CPA, not just somebody that they like, but somebody like you who knows what the heck they're doing. Mm-hmm. If they're not somebody that could give you a call that you could serve, how can they find a good CPA? What is your recommendation to look for in a good CPA?
Well, I think every business owner should look for a CPA that knows their industry. For example, I do work for a lot of real estate. I do a lot of work for small business. And I know, like we talked about earlier, if it's a real estate agent, I know the expenses you're going to have. I know what mileage should be. I know your tax return and your expenses almost before you walk in the door. So if you tell me something that's way out of whack, we can talk about it and get it back into something that's reasonable. Here's a great example: construction. I don't do construction companies, and to get really geeky about construction, they have different ways that they can recognize revenue. They have the completed contract method. They have the percentage of completion method. They have retained receivables. They have all these things in their industry that are weird, that you can't expect a normal CPA that doesn't deal in that industry to understand or know how to prepare that tax return. Myself included. I don't do construction. I did a little bit of it at the bigger firms. I didn't like it. I like the small business far better. So if I get a referral for somebody like that has a construction company, there are fellow CPAs and enrolled agents that I can refer that work to. I also don't do estates and trusts. If somebody says, we have a family trust and we need the trust return prepared, that's a referral to another CPA. I do small business. I do their entity returns. I do their personal returns. I do tax planning. That's what I spend October 15th through the end of the year doing with my clients. And I do their payroll. And one of the reasons I do their payroll is because since I'm doing their payroll, I can withhold enough tax so that when they walk in the door at tax time, they owe nothing. It's beautiful.
Yeah.
But I also know the area, the box that I want to work in. And it's funny. When you're looking at CPAs, as far as I'm concerned, most of them have this weird disease. And the weird disease is that every client that walks through their door, every dollar that wants to come into their door, they welcome. They have to take. They can't turn down work. I figured that out a long time ago.
Yeah.
I have the client base that I love to serve, and that's really, I don't want to step outside my comfort zone.
That's good. That's good. And that problem is not relegated to CPAs. That's across all industries, I think, where people have trouble saying that. So I love that you're able to narrow it down to know what you love to do, and you can focus on that. And hopefully, if there are any other CPAs listening who have trouble saying no or referring out, that they take a hint and learn to do what they love and be very good at that. So real quick, because I know Katie's going to ask you a question about your social stuff, but what is your service area? Because obviously we're broadcasting out nationwide to other countries. Where's your service area? Who can you help?
I can service anybody in the United States and even beyond, but I only do United States tax. So if I have somebody living in California, yes, I can do their federal returns. I can do their California returns. I'm being trained in California. I'm used to multi-state taxation. A lot of Florida CPAs aren't. They've never had to deal with state taxation, so it kind of baffles them. I have a few clients in Australia that are doing land investing here and have to file. I have Canadian clients as well, but I don't do Australian tax returns. I don't do Canadian tax returns. I do United States and state taxation, but I can do anywhere in the nation.
Perfect. I love it.
That's great. I love that too. I think it's going to be, you're such a great resource and such great information. Thank you so much for all of this, Charles. One of the things we definitely want to do, and we'll of course link everything in here as well, but what are the best ways for people to find you, whether it's website or social media, or what's the best way for people to kind of find you in different ways?
The best way, and most of my clients find me on Facebook, and we communicate almost all day on Messenger. You can almost always find me on Facebook. And the thing to find me is my last name is spelled a little differently. Most people think of Shapiro and think it's Shapiro. It's not. It's ERO. So as long as you remember that, you should be able to find me easy. And from there, we can start a conversation. I can point you to my website. From there, I can give you my email or all my contact information. But that's easiest.
Absolutely. You're so technology and social forward, Charles. Thank you.
I love it. That's great.
For those of you out there in the ether, we will put Charles' information in the chat so you have it. It's easily accessible for you. Feel free to reach out to us directly or him directly with any questions. If you reach out to us, we're going to redirect you to him, but we can get you there.
Perfect.
And we want to thank everybody, and especially you, Charles, for joining us today. This was super informative, and I know that our viewership is going to get a huge amount of value out of this. Thank you so much.
My pleasure. It's great to be with you guys today, or this afternoon.
Awesome. Yes. And we hope that everybody has a great weekend, and we will see you next week. Thanks for tuning in.
Happy Friday.
Happy Friday.
Thanks, everybody.